I would say the growth and the forecast of our economy is probably the number one thing that impacts the people I serve in Southwest Washington. And so it's helpful to hear from your perspective. Specifically, in rural communities where unemployment is higher than the national average, most of my areas are rural, although we're bumping up everywhere. I wanted to hear some of your biggest takeaways. And I've gone through some of your testimony. Again, I apologize if you're repeating. But in terms of outlook and some of the things that we've done in the most recent years with regard to the Tax Cuts and Jobs Act, different regulatory changes, but to either maintain the growth that we've seen or expand it, what recommendations would you give?
Well, first, I think the outlook is still a positive one. There's no reason this expansion can't continue, and there's a lot of value in continuing it, and we're trying to use our tools to accomplish that. We're seeing this the 11th year of an expansion, now the longest in U.S. recorded history. What we're seeing is that income gains are the highest at the lower end of the wage scale. And so it's very positive. We're also seeing people being pulled back into the labor market. There's a lot to like about this rare place of the 11th year of an expansion. And I think we're certainly committed to doing what we can to extend it.
In that vein, I know your testimony touched on concerns with regard to the national debt. Could you elaborate on that and how it should be addressed, particularly as it relates to expanding or at least not contracting the economy?
So I think it's a longer-term issue that I imagine we all realize will have to be addressed over time. It's just the case that now that the debt is growing faster than the economy, than the nominal GDP. And ultimately, in the long run, that's not a sustainable place to be. Now, how to fix that? It's easy to say that, and how you do that and when you do that is an issue that is up to you and not to us. But I would be remiss in not pointing out that the consequences of not addressing it are just that we'll be spending more and more, our kids really and grandkids, they'll be spending their tax dollars servicing debt rather than on the things they really need, as I mentioned earlier: education, health care, security, all the things that we need, that they'll need. They'll be spending more and more of their money on tax. But you don't need to balance the budget or pay down the debt or anything like that. You just need to get the economy growing faster than the debt. And that should be I think, the goal. And by the way, the successful programs for countries to get back on a sustainable path tend to take place over a long period of time and be relatively gradual. And I would be looking at something that would work over time, but really would not be giving you a lot of advice on how to do it.
With my final 30 seconds, do you anticipate maintaining the current Fed rate through the next year?
No, I wouldn't say that at all. What I've said here, and I'll go right to the actual language, is that we see the current stance of monetary policy as likely to remain appropriate as long as incoming information about the economy remains broadly consistent with our outlook of moderate growth, a strong labor market, and inflation near our symmetric 2% objective. So that's a very data-dependent statement. We do think monetary policy is in a good place, but we're going to be watching very carefully incoming data, and if developments emerge that cause a material reassessment of the outlook, then we'll act appropriately.
Context, context, context. Thank you.